So next one is FPX Nickel Corp. They're listed on the TSX Ventures Exchange under the ticker symbol FPX, and on the Frankfurt Stock Exchange under the ticker symbol FP5. So let's give them a warm welcome.
To go through this one. Okay. Okay, excellent. Oh, that's okay. Thanks. All right, good morning, everyone. My name is Martin Turenne. I'm the president and CEO of FPX. Thanks for coming to our presentation today. I'll give an overview of the company, but I'm very happy to have conversations outside as well. So please do approach me if you have further interest to find out more. So FPX is a Vancouver-based company. Our main exchange is on the TSX Venture Exchange, but we do trade here in Frankfurt, as mentioned. The company is quite simple, quite straightforward. We're developing one of the world's largest nickel deposits. It's located in British Columbia. We've just completed a preliminary feasibility study, and we're quite confident that this has the scale and meets the criteria to be of interest to major mining companies. And we think ultimately the exit for shareholders will be a sale, an outright sale to a major mining company in the period to come. The project is called Baptiste. It really represents a unique opportunity for low-cost, low-carbon nickel produced in Canada at a very high scale. The recent pre-feasibility study we completed estimates annual production of 59,000 tons of nickel per year for 29 years. At that scale of annual production, this would be one of the 10 largest nickel mines in the world, and so very much a major company scale asset that we hold 100% of, but have had interesting strategic engagement with a variety of parties in the last several months, which I'll speak to a little bit later. The Baptiste project really represents a unique opportunity to develop a fully integrated nickel operation, one that can produce nickel that would go either into the stainless steel sector or into the EV battery supply chain, which is obviously growing quite quickly in North America. The key here is that we have an interesting or unique style of nickel mineralization that allows us to bypass the typical smelting process. That is, that our mined concentrate can skip the smelting stage because it is very clean and go directly either to stainless steel customers for their use in the electric arc furnace or into producing a battery-grade nickel chemical. And we've done strong test work to demonstrate that and are starting to form strong partnerships that validates both of those paths to market for our product. Baptiste sits almost the geographical center of the province of British Columbia. It is close, approximately 80 kilometers away from Mount Milligan and about 200 kilometers north of Blackwater. Blackwater just received its final permits and is now in construction. Milligan has been in operation for 10 years. The Baptiste project occurs on the traditional and unceded territories of 4 First Nations. Those are the Clauston Nation, Binche Wuten, Yakuchi, and Takla nations. These are nations with which we continue to move forward very positive engagement, and in some cases building on relationships that have been made over the past decade indeed. And we also have been working closely with the provincial government of British Columbia and the federal government of Canada. This is a project of major strategic interest to both levels of government, and we think that will help us ensure that the environmental assessment and permitting process here is as efficient as possible. Just zooming in here to a bit of a satellite view of the project itself. The yellow outlines the mineral claims at what we call the Dakar Nickel District. This is an area covering 245 square kilometers. Within that, if we zoom in, the main deposit of ours is called Baptiste. You can see that here at the southern end of the image. And approximately 6 kilometers north is a new discovery that we've made called the Van target in the last few years. Most of what I talk about today will touch on the Baptiste deposit. This solely underpins the preliminary feasibility study. As I mentioned earlier, it's one of the world's largest nickel deposits. But the recent discovery that we've made at the Van target in recent years really testifies to the district scale potential. Baptiste will support at least a 29-year mine life, and our view is that Van will ultimately have the scale to add additional decades onto this. So this is truly a multi-generational opportunity. I mentioned earlier briefly that we are dealing with a unique style of nickel mineralization here. This is not a nickel sulfide type deposit that you might commonly find in Russia or in Canada, or a laterite that you might find in countries like the Philippines and Indonesia. The nickel here is hosted in a mineral called awaroite. The chemical formula of awaroite as a mineral is Ni3Fe. So there is no sulfur in the mineral here, and that's the key thing that distinguishes it from a sulfide mineral. This is a disruptive new source of nickel for the market. We are the first, while there are occurrences of this type of nickel in dozens of countries around the world, including here in Europe, this is the first deposit of its type that's ever been found where there's an economic concentration at a large enough scale and at a high enough grade. So the question is, can this be economically recovered? Can there be a profitable mine operation developed around this style of mineralization? And to that we say definitively yes. The test work that we've done from a metallurgical standpoint and the endorsements we've received from strategic investors in recent months testifies to that. But the key property that I would want you all to remember about this style of awaroite mineralization is that it's highly ferromagnetic. It's an order of magnitude more magnetic than magnetite iron ore. And that allows us to use magnetic separation to recover this mineral, as opposed to conventional froth flotation of the entire ore. Most of the ore can be rejected, about 95% of the ore can be rejected as non-magnetic, using magnetic separation and really leveraging this characteristic. So thus the ability, I think, to develop a disruptive new source of nickel supply. The flow sheet is shown here. I won't go into significant detail on this. I will say, though, that we are dealing with a low-grade deposit here. It's only about 0.21% nickel. But after 3 stages of magnetic separation in rejecting 95% of the ore to tailings, what remains is a very small footprint of mineralization, about 5,000 tons per day of almost 3% nickel. That mineralization then goes through, or that concentrate goes through flotation to then produce a very high-grade concentrate, grading 60% nickel. That is the key value proposition here, is the production of a concentrate with very high grade of nickel and virtually no sulfur or other deleterious elements that allows us to bypass that smelting stage and produce a product that goes directly either into the stainless steel market or into the battery supply chain. And our recent pre-feasibility study provides a lot of detail that explains both of those paths to market. With respect to nickel for batteries, that really is the holy grail of nickel production currently, is producing a product called nickel sulfate, which is a chemical or a crystal that looks a little something like this. This blue crystal is the result of test work that we've completed with Sherritt Technologies, which is a leading nickel hydromet group in Canada, from our ore. And what this slide demonstrates is that the path to producing battery-grade nickel sulfate is typically very long and complex and involves multiple stages of treatment and refining, whether that is dealing with laterite ore from Indonesia or dealing with sulfide ore from places like Russia and Canada. The awaroite ore, given the cleanliness that it has, offers a much faster path to producing nickel sulfate, reducing processing steps, reducing transport costs, reducing the carbon footprint, and really representing that disruptive advantage of nickel for that supply chain. To that end, we've recently received some funding, some federal money, grant money rather, from the federal government of Canada to further upscale and demonstrate our production of battery-grade nickel sulfate in a pilot program. That program is currently underway. Those results will be out in the first quarter of next year. The early results are very promising and shows that we can really meet that battery-grade specification through a very simple refinery process. This is not the high-pressure acid leach process that is used in Indonesia. It is leaching at very moderate pressures and moderate temperatures, far more akin to what's common in the gold sector, which is widely used these days. I talked a little bit about our strategic partnerships and investments earlier this year. We took on a new strategic investor, Outokumpu. This is a Finnish company. This is Europe's largest stainless steel company. They now own 9.9% of FPX. They invested via private placement. They invested at a 40% premium to market. And in return, we provide them with a small slice of offtake of future nickel production. Now, why did Outokumpu make this investment? This is a large Finnish company. It has never made a similar investment in a junior mining company. It's really two reasons. One, they have been historically reliant on Russian nickel as part of their feedstock for making stainless steel here in Europe. That is problematic for obvious reasons now. Secondly, Outokumpu markets their stainless steel as being the lowest carbon stainless steel in the world. And that has to be a function of where the nickel and the iron and the chrome that are inputs into that process come from. So they're very focused on securing supply of nickel from the lowest carbon sources. That is what our project offers, thus the investment that they've made here, and they will be a long-term partner with us. Other partnerships, I think, of interest to note. Earlier this year, prior to the Outokumpu investment, we took on a global joint venture partnership with JOGMEC. This is a Japanese state agency responsible for mineral exploration. JOGMEC is very focused on securing mineral rights to prospective projects that can serve the interests of Japanese industry. With respect to nickel, their particular interest is nickel for batteries. They recognize that this type of awaroite nickel mineralization that our company is focused on has this disruptive potential for batteries for vehicles. And so they are solely funding a 2-year exploration program. They're funding 100% of a 2-year program whereby our geologists are out in the world today scouring the globe for similar deposits to this. This leverages a previous process of global search that our team conducted 10 years ago. And so we do have a first mover advantage that JOGMEC realizes, and as an agency of the Japanese government, this is a huge endorsement for this style of mineralization. More recently, we signed a battery supply chain agreement or memorandum of understanding with a company called Prime Planet Energy and Solutions, or PPES. It's a bit of a mouthful. This is Toyota's battery company. So we announced that at a signing ceremony in Ottawa in September. This signing ceremony was attended by senior ministers from both the Japanese government and the Canadian government, really testifying to the importance of collaboration between free trade allies like Canada and Japan in developing this critical mineral strategy. And of course, for us, the endorsement from Toyota represents a significant validation of this disruptive new approach to nickel production that we're pursuing. As I mentioned earlier, we recently completed a preliminary feasibility study. The results are very positive at a fairly modest nickel price assumption, US $2 billion of post-tax NPV, operating costs of below $8,000 per ton of nickel, or below $4 per pound if you're more comfortable in per pounds, efficient payback in 3.7 years, and a 29-year mine life that again really supports this concept of a potential for a multi-generational project. I mentioned earlier our ability to produce nickel with a very low carbon footprint is very important to both Toyota and Outokumpu. We envision that the carbon emissions of nickel production here will be very low. Some of the Indonesian nickel production can result in 69 tons of CO2 being emitted for every ton of nickel produced. We are at the other end of the scale, emitting only 2.5 tons of CO2 for every ton of nickel. This is very important. One of the dirty secrets of EVs is just how carbon intensive the process to produce these batteries is. So to be able to produce very low carbon nickel in a free trade ally country like Canada is critically, strategically important. Despite all of this, we do trade at a discount to our peers with respect to valuation. The market cap divided by the project NPV for FPX represents about a 0.04. That is that our market cap represents only approximately 4% of our project NPV. Why is that? Why are we undervalued versus the peer group? I think it's an ongoing education process for the company to inform investors about this disruptive new source of nickel supply, to confirm that it's not a science project, that it is a valid and will be a very economic operation in years to come. And we believe that the endorsement of some of the groups that I mentioned earlier should really validate that for institutional and retail investors out there. Finally, in terms of share ownership, management owns about 17% of the company, something we're quite proud of. I've been running the company for about 8 years, and that ownership share for management has increased from about 6% to 17% over that span of time. I mentioned Outokumpu as a key investor. We have another strategic investor who came into the company in a private placement last year. It is a large public company, but they're not comfortable having their name disclosed at this time. But we look forward to the opportunity to disclose that to the market in the future. It is a name that everyone in this room would recognize and represents another exciting validation for the company. We currently have $28 million in the bank. We're fully funded for 2024 and well into 2025. And frankly, going forward, we do not envision having to do any typical market financings anymore. We have a line of sight to an additional strategic investment from a new group that we would hope to crystallize in the new year. So please do be on watch for that. And again, we're quite confident that investment would be done at a premium to market. You'll recall I said that the Outokumpu investment was done at a 40% premium to market. The other confidential investor came in at a 27% premium to market. So we're in the fortunate position of not really having to deal with these difficult capital markets and being able to offer to retail and institutional investors the ability to buy in the market at a lower price than where we actually finance the company. Thanks.
Does anybody have any questions? I do have one. So this, as you mentioned, this is not the most common deposit out there worldwide. And you know, investors would often look for experienced teams leading these companies, and well, I suppose that's hard to have given how new it is. How are you finding geologists who know what to do with this specific type of deposit?
Yeah, so I mean, the founder of the deposit here is our chairman, Peter Bradshaw. He's a member of the Canadian Mining Hall of Fame. He's a very well-regarded, quite serious academic geologist. And so that, I think, you know, his leadership in that regard has been very good. You know, we were able to hire a senior person from El Dorado to come over and run our generative program that we're doing with JOGMEC, so it really testifies to the interest that very serious geologists have in this. You know, with respect to the development of a large, complex project, a large CapEx project in BC, our project team is really tier one. We have really taken a lot of the people from the Fluor EPC office in Vancouver and brought them over to be employees of ours. These are people that have spent many years developing multi-billion-dollar projects for Glencore and Teck and Newmont and Freeport, McMoran, et cetera. And they're bringing that same tier one mentality to the development of this project as well.
Got it. Okay, then one last thing before I let you go. It's so you're between the PEA and the PFS part of the Lassonde curve. How far up the curve do you think you're going to have to go before you start looking for someone to sell this thing to?
So we have completed the PFS. We're now moving towards the feasibility study. We're very confident. One of the things that's been very interesting and I think validating for us is we've had a lot of engagement with very, very large companies, mining companies, car companies, battery companies over the last 12 months, stainless steel companies. And those companies bring a tremendous degree of diligence to their processes of reviewing our engineering materials and our studies. And consistently, it's very positive feedback on the sobriety and the seriousness with which we're developing this project. There is corporate interest for sure. It's hard to see that from today's valuation level, trading at only 4% of our project value, that we can extract the value that would be of interest to our shareholders today. But there's no shortage of corporate interest in this, and obviously our ability to attract some of those strategic investors speaks to that.
Right. Okay. I appreciate your time, and thank you for doing this.
Thank you. Appreciate it.